You've done the prep work, now it's time to build a document that will be critical to your fundraise, your pitch deck. At the early stages of fundraising for your company, you'll probably have less to show in terms of revenue and traction. That means your deck needs to inspire enthusiasm and showcase potential. First impressions carry weight. This is part 2 of our Ultimate Pitch Guide series. Let's break down the essential elements of a winning pitch deck. And if you want practical fundraising advice, be sure to subscribe. Slides 1 and 2 should be your introduction and vision. Your one-line description should explain what your company does in the most basic terms. Avoid jargon like end-to-end or tech-enabled. Make it so clear that an investor with zero context immediately understands. Airbnb's original deck said, "Book rooms with locals rather than hotels." It was simple and clear. And your vision tells investors how the world will be better with your solution. Show them the scale of your plans. Next comes your team slide. At the early stages, investors often heavily weigh your team's background and experience. Past research, successful exits, meaningful operating roles, schools, industry achievements, all of it matters. Pro tip, put your team slide early. For a pre-seed company, the team is a huge part of the decision. Slides 4 and 5 cover the problem and its solution. Your problem slide sets the foundation. Clearly illustrate the pain point people are experiencing. Define who's experiencing it, consumers, businesses. Be specific. More importantly, your solution side explains how you're fixing the problem, how it works, and an early traction or social proof you can share. The next slide is your why now. This is where you demonstrate urgency. Why hasn't this been solved before? What opportunities make it possible to build your solution now? New regulations, shifting cultural norms, technology adoption, make investors feel the gravity. Slide 7 is your product. Keep the momentum going by showcasing how the solution works. If you have an MVP, include a demo video. If not, show mock-ups or a user journey. Highlight key features that differentiate you from competitors. Slide 8 is defining your market opportunity. Investors want to see that any company they invest in can reach significant scale. A common benchmark is 100 million in annual recurring revenue. Break down your total addressable market, serviceable addressable market, and serviceable obtainable market. Use industry reports or calculate bottom up based on your revenue model and target customers. Slide 9 explains your business model. How does your company make money? Since it's early, it's best to lay out your assumptions. Show investors a well-considered path to positive unit economics and profitability. Slides 10 and 11 cover traction and metrics. Early traction shows what you've executed so far. New features launched, revenue generated, customer case studies. As you progress, investors want to see customer growth, retention, churn, and growth efficiency. For the metrics slide, focus on metrics that drive real revenue and growth. Avoid vanity metrics like page views unless the conversion rates are actually performing well. Slide 12 is your go-to-market strategy. How will you reach your first customers? Where will you find them? How much will it cost to acquire them? Be specific. Vague plans signal you haven't thought this through. Slide 13 covers competition. Show investors you understand the market and how your solution is differentiated. Use a matrix, table, or a list to highlight specific points of differentiation. Investors will almost always ask about competition. Slide 14 is financials. If an investor gives you money, they'll want to see your current financial position. Aspects like current revenue, cost, cash position, monthly burn rate, and runway will be important to include. Even if you're pre-revenue, model out basic financials for the next 3 years. The benefit isn't spot-on projections, it's showing you spent the time thinking through growth and spending. Slides 15 and 16 are your close and ask. Be very clear about investment details. How much are you raising? What type of security? Valuation or valuation cap? Show momentum by noting any high-profile investors who may have already committed. One more thing, customize your pitch for different investor types. For example, VCs tend to care more about power law returns. Angels and scouts may care more about your team and vision. Strategic partners care about synergies. Family offices tend to prioritize alignment and trust. Your pitch deck is your first impression. Make it clean, clear, and persuasive. Check the description for our pitch deck template and resources. This is part 2 of our 4-part series. Next up, we'll cover how to engage investors and kick off your fundraise. If you found this helpful, make sure to subscribe so you don't miss the next video.